Hello, welcome. If you're just joining the stream, I'm just cleaning up my chart right here. But we will be doing some back testing on Power of 3 and Silver Bullet. Alright, let's get straight into it. So, the main focus today will be kind of discovering the daily expansion, how we work around sessions, what do we target, and ultimately having an entry model. So I'm going to kind of combine a few things, but yeah, those are going to be the main concepts. So going into Monday, you don't really have a weekly profile going into any Monday. You just have a draw. A lot of the time, what the draw is going to be is actually going to be the new day opening gap. Or sorry, new week opening gap. So that's going to be from Friday's close to Sunday's open. It's going to be right here. And you could see a lot of the time when we open up, we're actually going to fill it in at least once. You can see right here, we kind of come down, just melt down into it. I do like to either target it later into the day, which is going to be about New York session silver bullet time. So let's hop on the higher time frame, see what other aspects we have in here. Okay, so the first initial thing we're going to see is this fair value gap. And previously to this, we actually saw this entire range being respected by the equilibrium, which is why I've kept this here. This is what I've been focusing on because that's our delivery. Let me measure this out so you can see what I'm talking about. Here we go. So this is the equilibrium, and you'll see price over and over has been respecting this area, following through to the week. This is just called a dealer's range, and we could use it as part of our PD array matrix, our IPDA matrix, just to figure out where we are on the actual spectrum of discount and premium. So now that we have that fair value gap, we know our draw is higher because of the new week opening gap. We also left Asia open. Many times when we leave Asia, we're likely to at some point actually retrace to it. So now that we have all that, we're going to find our entry model. Okay, so I'm gonna see if we get some kind of displacement, some kind of market structure shift in here. And you can see how perfectly price actually respected this fair value gap. So if you wanted to, you could enter there. However, I just want to have a more clear, concise entry. Okay, we have our full market structure shift, which was right in here. Okay. Could actually see price comes down into this fair value gap. And remember, when we're trading Power of 3, we actually want to see, because we're bullish, we want to see this candle turn green right here. This is the daily candle. So we opened up here, we traded lower. Now we want to see us trade higher. And honestly, at this point, we probably should have already entered, which was inside of this fair value gap. So I'm just gonna enter right there, TP here. See how that works out. Just because we've already had our manipulation, and if we've already had our manipulation prior to our open, then our open is likely to just run to our target. Okay, that's a good example right there. So because we've already took out, say, the previous week's London range, we're respecting that 4-hour fair value gap. This little move right here was already our Judas swing. If we wouldn't have had that move, usually 9:30 open will cause that move, but because we've already had that, we're likely to just run straight towards our target. So at this point, if we trade up in here, so we're gonna go to break even right there. Okay, candle turned green, and that's our move right there. Okay, so that's gonna be probably if you took that trade, that's probably gonna be your first trade, your main trade. Let's see how else it plays out right here on the lower time frame. Okay, so something I noticed right here, we actually have these two fair value gaps right here. We have no fair value gaps in here. This is known as a low resistance liquidity run. So once we get that market structure shift, we've taken out Friday's high. So that's a time-based liquidity pool, previous day high. And then once we get that market structure shift, we're looking for our model, which right here, it's probably just going to be based off of the IFEG we could enter. Okay, let's see if we get a, no, okay, it didn't fully close, so it's not yet IFEG. Okay, we got closure right there. That's good enough for me. Okay, this is a balanced price range right here. And then right here we have our full market structure shift. So I'd expect that price doesn't come back up here. And we'll just focus on the low of New York right there. Let's see how this works out. Okay, perfect. And you could see once we hit that low of New York, we actually come right back up. There's going to be a lot of liquidity, a lot of influence built up by this New York session open. And many times we're going to trade down to the low when we're retracing, and we might not see follow through right away. So that's why I actually set my TP to that low. Okay. Now, not sure what else we have here, because at this point quite a lot has happened in the day, and it's a Monday, so we probably shouldn't go too crazy here. Let's take a look at what lunch does. So it looks like it sweeps out these lows. Okay, we actually are respecting this fair value gap. Okay, let's look at our macro right here. I've already ran this low resistance liquidity run. Okay, let's see if there's an entry inside of this macro. Two-minute. Think I'd be more interested in a buy right here. Continuation macro. I know we swept we did sweep these highs. However, it looks like we're displacing higher. So we'll see if we could get a quick scalp in here. Top of this range. Okay. Let's go break even at that point. This is the top of the new week opening gap right here. All right, break even. Okay, at this point, probably should be done for the day. Let's see how this trades. Yeah, it kind of consolidates the rest of the day. But I was kind of looking at if we could get a potential continuation macro through this. That new week opening gap held, makes sense. And we just dumped. So let's go to the next day. Let's clean this all up. All right. We're going to go to Tuesday at... All right, we could start getting on the lower time frame now. Okay, so far our development is... We left Asia open over here. We have Asia, London open. But you have to consider we're also coming off of a Friday high sweep. And then we have these lows and these lows. So at this point, we're kind of trying to discover what side are we going to sweep first. And I'm actually going to let this play out a little bit more so we have more information to work with. Okay, looks like 830 is coming down. Okay, so we do have these lows. However, we did leave Asia open up here. So I'd be more interested in what will happen up here than what will happen down here. And currently we don't really have a weekly profile created yet, so. Okay, 5 minute. So we have respect right here. I do kind of want to see a larger market structure shift, which would be inverting this 15-minute right here. This would be our New York Open Judas swing right here, taking this low. Then we just want to see our market structure shift, and then that would be our entry model pretty much, inverting this IFEG. And remember, we're waiting for this candle to turn green. We're we're black right now, so we want it to turn green, which would need price to come all the way up and trade up here actually. Okay, let's actually go back to 15-minute. Okay. Yeah, we inverted everything right there. We actually have a fair value gap in here. I'd just say maybe down here would have been the better entry, but I was on the higher time frame, so I'm gonna look for a buy in here. And then TP will be, we'll wait for the candle to turn green. So we'll have it up here. Okay, so this is going to be a early silver bullet. So this is before that 10 a.m. time, but we've already had so much development. We had our manipulation, we accumulated through here, so we should have our distribution. And we had a market structure shift through the 15-minute, which I showed you guys we inverted. So let's see how this works out. Okay, really choppy in here. IFVG. Let's see if we trade through here. Okay, looks like we held this through this fair value gap. That's why you have to watch bodies. We kind of stepped out right here, but those are just wicks. We have our body actually respecting through here. And you can see the IFVG kind of pushes us through. And at this point, we should be break even. And then we've taken Asia. Let's see if we follow through to that area I wanted to. Okay. I'm kind of liking, we came up and we took that Asia high and we're not really seeing any kind of follow through. So at this point, I'd be more interested in just exiting. See if we trade up. Trying to still get a good RR. There we go. Yeah, so maybe the better option would be to actually exit on this Asia high. But when you see us come up and we're not really seeing any follow through, it gets a little iffy if we're gonna trade through that. It's obviously better to stick to your plan. However, if we have good risk to reward, we have a clear defined exit area, then that's okay. So let's see what happens. Yeah, we would have gotten stopped at break even right there. So that's a good thing we exited early. Let's see what else we have later in the day. Let's see what lunch does. So it looks like we come down, sweep this low. Wait for some more development here. Okay. Clean some of this up. So I do like kind of all these highs we have right here. And then right here, that signifies a low resistance liquidity run. Right here we have a singular fair value gap. That's great for an IFVG model. And maybe we'll get our final push up into here. So let's see. Okay, I'm simply gonna enter off of that. So this pattern, it's a IFVG. We kind of have a breaker pattern forming right here from the low to the high to the lower low. And so even though we're not coming back and touching the IFVG, if you have enough displacement, then it's not a bad idea to actually just enter in a market order. So we'll see, we'll target this. We want the daily candle to turn green right here. Okay, that's our low resistance liquidity run. I will go actually break even at this point. So you want to see a steady straight move up higher. There we go. Yeah, it's really great. At that point, I'd probably be done trading for the day, just because we've had quite a bit of development right here. And it looks like we actually take Monday's high. So let's go to the next day. Oh, you could also see right here these bodies respecting the midpoint. I didn't notice this until we went to the higher time frame. So it looks like something different occurred on this day. Before I go any further, you see Asia session, actually the buy side was manipulated. So what that means is now we don't necessarily have to trade to Asia, where previously both days we traded to Asia because we left it open. But if it was already manipulated by London, what this is actually a accumulation, manipulation. So New York session should be distribution. So think of it like this. Asia opened right here. This is the opening of the daily candle. We wicked up, creating our manipulation, and then the rest of the day should be our distribution, which we're going to still focus on that silver bullet time. And something else I noticed right here is Tuesday, New York PM. We actually took some highs in here. And what this is looking like is a Tuesday high of week market profile. So Tuesday's high swept out Monday's high. It also took what I said, this high as well. So this gives me that impression that Wednesday should distribute lower due to Tuesday being the high of the week. So we have these lows, and I'm actually going to ignore this fair value gap just because we have quite a bit of development in here. Then we'll still look at equilibrium. So this could have been an entry right here. We weren't looking at this time, so that's fine. Let's see if we trade lower. Okay. So I'll have these lows right here. Okay, looks like kind of chop. We do have this fair value gap in here. But in my opinion, it's kind of a mess. You see these highs got taken, kind of low resistance right here. But we're still looking at where are we going to trade lower. You could actually see in here, the wick respect this, trade lower. Okay, looks like we get a market structure shift. So we take one initial low, which is actually Tuesday's low. We do have more targets though, so we could look at this fair value gap as a market structure shift. And we could actually go short right here. Let's see how that works out. And our main target, let's make this our main target. Down here. Just because this is lower to our equilibrium point, that would be our final target. So let's focus on that. But we do have all these other areas right here to enter. So let's see. Sell. Larger stop loss. And then we move this aside. Let's let this play out. All right, that's all right. So what happened here? So we are coming off of a daily sweep, and we do still have some highs right here. So that is a more risky entry. We tried it, didn't work out. That's okay. That's our first loss. So let's go see what other kind of development we get. Okay, looks like we swept out these highs that we were looking at. This high is actually a protected high. Due to it sweeping these highs, we're likely to not take out this high just because it doesn't need to at this point. So we have some fair value gaps in here that we could invert, do whatever with. However, something I noticed earlier, I had mentioned when you have stacked lows like this, we're likely to trade straight through them. And so we're just looking for our entry model. So that'll look like this. IFEG. Okay, traded right below it. Kind of that breaker pattern we saw earlier too. We have our market structure shift. We're not far away from our actual entry, which our normal entry would be inside of that IFEG. But because we might not trade back to it, why not just market enter? I'll enter too, just so we have some like partials to work with. So our initial, this is going to be our initial fair value gap in here. Our first fair value gap, I'd say. Some low resistance qualities right here. So we'll partial off somewhere in this area, and then we'll go for our main target. Okay, continued development right here. All right, let's partial off one right there. Looks like we could go on the higher time frame now. Go break even now that we partialed. Oh, I think I accidentally tapped it right there. But we do actually trade through our main target later into the day. And I wasn't really looking right here, but inside of this lunch macro, let's take a look. Looks like we come up, we sweep these highs. We have some low resistance qualities right here with this low, this low, this low. Also these lows. Could have actually entered off of this IFEG. And could have used our main target right here. So that could have been an entry model if you wanted to enter right there. I just wasn't really looking on the lower time frame. So let's see what price does now that we have traded inside of the daily volume imbalance and our equilibrium. Okay, sure, if you go on the higher time frame, yeah, so we sweep out some of these lows over here. We still have respect of this fair value gap in here, 4 hour also. Something that catches my eye in here is, let me pull up our chart values. So if you look at this candle, the open is at 155.75. Okay, the low 155.25. So we do have a wick on this candle, but many times when you see these candles with small or no wicks, we're likely to trade to those, and because it's a unbalanced area, it needs to be balanced. It's inefficient, so it needs to actually see price trade to it to make it more efficient. So that's called a vortex candle when you see that, a candle with no wick. And let's see at this point what ES has done. Okay, so Wednesday, traded lower to this fair value gap right here, sweeping all these lows. Let's measure out our equilibrium right here. So it's going to be from this low. Yeah, so also hit our equilibrium in here. So on a daily time frame, that's probably what we were going for, our discount area. That's why we traded so much lower. You see this order block right here actually take into effect too. You have this fair value gap as well. So when you're when you're in that much of a discount, you're likely to just see some kind of large reaction from it, and you could see that actually occur right here. So that also could have been an entry. Let's look in here. So honestly, as soon as we saw us come up above this candle, this chalk candle, you could just get long. Once we have that closure right there, obviously you could partial into here, but when you're in that much of a discount, you could honestly aim for more, something like this, which would be lunch high. Another thing that I noticed right here, this vortex candle, no wick. We trade up later into the following day. So yeah, that's what it looks like. Same entry model in here. You have IFEG. You just enter off of that. So let's go to the next day. Let's actually clean this up too. And we'll leave that. You guys gotta tell me if there's an easier way to grab all of this and just delete it without having to delete everything. Okay, that's fine. So at this point, we're going into our next day, which we took a lot of sell side, and we're going on to a Thursday. So by Thursday or Friday, if you hit your weekly target, you're likely to see some kind of TGIF, which is just a retracement of the week. So let's look at some of these highs. You have kind of low resistance qualities right here through these highs, all of these highs, and then through this high, and then mark out that one too. Let's see what happens. Okay, so in this case, we do kind of have two draws right here because we left Asia open, and we have these highs as well. So let's wait and see if we get more development. Okay, looks like we took London low. I'm gonna go on the 5-minute, see if we get any inversions, any market structure shifts. So we currently took London's low. We might trade lower to Asia's low, but we'll just keep an eye on it. Okay. So it looks like we're just being held up by this fair value gap at this point. We have a lot of consolidation in here. Yeah, so probably wouldn't trade this session just because we have not inverted this fair value gap. It's kind of signaling seek and destroy right here. That's what it's called. So we come down, sweep Asia's low. That's great. Prior to our expansion, remember we want Asia to be taken already. So that's great. I'm gonna hop on the lower time frame, and now that we've taken that, see if we get some kind of market structure shift. So I like that. So far we inverted this. Could have gotten a better entry right here, honestly. I just wasn't really looking. So let's see. Now that we hit that. Our target. Looks like I accidentally hit TP. I don't know why it's doing that. There we go. I mean, at this point, we're asking a lot at a price, but let's just see what happens. We want to see expansion to and through these highs. So let's see. Let's wait. We want to see if this gets inverted. We can move our stop to break even. Okay. See if we see any follow through. Okay, looks like we get taken out. Let's try again. Swept. We just swept this low. We have lunch highs, so we're likely to take those out at some point. Let's see if we could see that expansion. Okay, let's buy 2 as soon as we invert that. All right, this is actually a better setup than the last one because we have a singular fair value gap and then a swing high. Whereas this one, if we got long in here, there's a possibility we just get taken out by this fair value gap. So this one's a bit safer. And let me set this here. Notice I don't really have just like a main target yet. We're just kind of going based off our conditions. Okay, we inverted all of these fair value gaps, so at this point, go break even. Let's hop on the higher time frame now. Okay, looks like we're already going into the next day. Something I'd like to target now, just partial out now, is this high right here, because this becomes Thursday's high. So we'll partial once we hit that. Okay, notice Asia's low just got taken right here. So we could see some actual follow through. And actually, I'm kind of liking this right here. Let's see how this plays out. Literally looks like the exact same entry we just took. You have a singular fair value gap. You have a swing high. We do have other fair value gaps in here, but that swing high is crucial to seeing us trade through that. and let's see how that trades up to that high. Awesome. So let me take off one right there. So that would have worked as well. Literally that same exact pattern we just saw on over here happened right here. So that could have been another entry. Let's see. I'm actually going to move my target up higher, because at this point we've gotten quite a bit of development really early. We already took Asia's low. Looks like London's actually expanding, so we'll see what it does. Okay, we're getting some follow through. Let's hop on the lower time frame now. Remember, we already have our entry open. Okay, looks like we took out some lows. Let's see if we could get a IFEG model in here, because we don't want to be buying inside of we don't want to be opening up higher, making a new high of the day, and then entering. We want to get in on one of these retracements. So let's see. See if we could get in on this for value gap. Okay. I guess I missed it. I was kind of thinking we get some more development and then we enter, but it looks like that just opened up. So we'll just let it play out. Okay. Yeah, so we hit our target pretty early, but you could see that because Asia was taken, we're already gonna see our distribution going on later in the day, or in London actually, and then later in the day we're gonna see that continuation. That's kind of the same idea that happened the previous day on Wednesday, or 2 days before. We have Asia, we took one side. You see London starting to kind of distribute right here. And then we get our continuation going into New York. And same exact idea right here. So that's something you want to take note of. Asia session is really going to help you discover your bias and what to do. So if you guys have any questions, let me know. I'll take a look at the comments right now, if we got any that I could actually show visually. Trading, take a partial. So it's really like a lot of people think they should like push their stop loss super hard and do all these things, and in reality you're just going to get stopped out more often than not. When you're entering, you should be going in on an area on a protected low or a protected high. So like right here, because it swept out this low, we're probably not going to come back to that low. We're not going to sit here and trail our stop or do this. Like, you're just micromanaging at that point. Like, we're going to have our stop loss. Once we get confirmation, we're going to continue. We're going to move our stop loss then. So right here, I'm looking at, let me take everything off right here, make it really clean. Just focus on our risk management right here. So we're entering right here. We have the stop right here on a protected low because it took this low. We're not going to go break even until we have confirmation that we're going to continue inside of our model. So that's going to be once this becomes an IFEG, these highs become vulnerable right here. We're likely to continue. Whereas if you're just like straight up moving your stop loss every little tick you're going higher, you're gonna have trouble seeing actually continuation in your position. When you enter, you already assume that the position has lost. If I took this loss, then my account's gonna be fine. I could take this loss over 10, 20 times and my account's gonna be fine. You have to have realistic expectations on what price is gonna do, and you can't just jam your stop loss to break even always. So that's when we're gonna go to break even. Once we're likely to see continuation, which you can see that happens right there. And we're not gonna sit here and trail our stop. No, we're in a protected area right here. Who cares if price comes back on us? That's the risk we're taking. We're just gonna trade like normal, keep our stop loss to break even, and then we're gonna decide, okay, what can we do now? Well, we could take partials. We could look for our next target, but you ultimately don't want to be micromanaging. That's just a really bad habit. Let's see if we have any other questions. Does it mean that with win rate? Yeah. So every time frame, time is fractal. Let me take this off right here. See if we could get a similar model to what we took right now. So I want to show an entry that's the same across one time frame to another. So right here, I think this is a good example. I don't know why price is doing that. Okay. I don't know why that's doing that. So once this inverts right here, we have these lows, low resistance liquidity run. We have this low. Okay, let's see if we invert it. Okay, we're in a sell. Stop loss. Yeah, it would be right there. We're obviously not going to aim for that because we're not even getting good reward right there. But we'll aim down here. So originally we were taking a lot of 1 minute entries. Let's say we took a 5 minute entry right here. Okay. So it's going to be the same thing. You're just probably going to have a larger stop loss, and that's okay. A lot of the time you'll actually see the higher time frame have a little bit more influence on price, right? Because if you look at daily from 4 hour to 1 hour, you could see price moves off of those areas. So if we're using a 5 minute entry, then we're likely to see a little bit more influence off of that, more narrative. So you could see we do trade eventually to that low. So it's the same exact thing. I like lower time frame entries. Sometimes you could get better risk to reward. But I don't know. It all depends on your model, what you feel comfortable with. But either way, higher time frame, you might get less opportunities, but it might work out better for you. You might have better psychology. Or lower time frames, you might get more opportunities and you could be more precise with them. So it's all up to you. It's all kind of the same thing. It's all gonna average out to the same win rate if you're using the same kind of bias and things to develop actually your overall narrative and what you think price is gonna do. So with that, I'll probably end the stream. We did really well in here. I think we took 1 loss. But yeah, there's a lot of expansion going through this week. So yeah, take note of those Asia session liquidity, how it plays out with price, and how that power of 3 all comes into play into our expansion. So if you guys haven't, make sure to